Hi there, everyone. Good morning, good afternoon, good evening, depending on where you are joining from. This is Bruce Kirsch with Refi Certification. Thanks for joining our webinar today, which will be very informative. We'll go about 40 minutes and leave a handful of minutes at the end for questions. Feel free to send questions through anytime through the Q&A, and we'll go ahead and get it started here. So this is what we're going to cover. First, we're going to talk about why commercial real estate. And some of you are already in commercial real estate, so you know why you're attracted to it, but some of you perhaps are not. So we'll talk about that just very briefly. And then next, what's at stake for you over the next 5, 6, 7 years financially? And how can refi play a part in that? Refi in particular play an instrumental role in securing some financial success over the next 5, 6, 7 years. We'll talk about takes refi. We'll talk about some success stories. We'll give background on the authorship of the course and then an overview of the course curriculum, and then wrap up with next steps and some Q&A. So let's talk first about commercial real estate. As many of you know, this is a massive market. It's a fascinating, multidisciplinary business. It's global in nature. And as far as magnitude goes, it's huge. And depending on how you measure it and who's measuring it, what's included, what's excluded, it's generally speaking valued in the tens of trillions of dollars just in the US. And naturally, there's tremendous investment real estate and real estate value outside of the US as well. If we turn the clock back to March 2020, which seems like a long time ago, it's about 21 months ago, we had the president of Blackstone, the largest institutional real estate investor in the world, John Gray. He proclaimed publicly that he thought that the office market had bottomed out. And that is, from all accounts, proving to be true. He didn't say of April 2024, everything is going to be fantastic, but he was suggesting that perhaps as of that point in time, March 2024, the worst was behind us in terms of the shakeout of the flight to quality and the weaker properties in office and other asset classes sort of passing through the system, as it were. And you saw lots of headlines in the spring of 2024, some as extreme as an office building in Manhattan, 23-story building, sold at an almost 100% discount. And so those types of things, in retrospect, suggest that in that realm of time, spring 2024, will probably in about 6 months or so be able to point and say, yes, that was in fact near or the bottom itself. And so we've had these proclamations from other global firms, national firms, CBRE, Goldman Sachs, and many others. And we, at the same time, see headlines for the raising of funds, private equity funds, funds for equity, and also for debt capital. And these funds that are being raised now and have been raised for the last 18 months or so are the largest that they have ever been. Literally, the largest funds ever raised in commercial real estate in history. And so what does this mean? What this means is that the largest players, the most sophisticated players, are getting ready to make tremendous amounts of investment over the next 5, 6 years. And so, as many of you know, real estate is cyclical in nature. It is involving the supply and demand of physical property and space, as well as the markets, the financial markets for equity and for debt. And generally speaking, you have expansion periods of anywhere between 6 to 9 years. In some cases, it's even longer. 1992 to 2007 was just a tremendous run, absolutely tremendous run for real estate. And following what in retrospect we recognize as a peak is a period of correction, a period of shrinking, of reduction in rents, reduction in property values, reduction in demand, and sort of right sizing, as it were, of supply and demand. And so where we find ourselves today, we're poised to go on the next upswing of the commercial real estate cycle. So if you're thinking about getting into commercial real estate, Now's a fantastic time because it's about to start to really pop. And so that is reflected in what's at stake for you financially. These are some screenshots from a couple of different websites that show some salary ranges, just base salary for analyst and associate level roles at firms in Manhattan, Chicago, on the West Coast, and so on. These are all six-figure positions, okay? Base salary, six-figure positions. And these are the types of positions which I'll describe later that a lot of our graduates are targeting or are already in and wanting to move up more rapidly from. So this is from select leaders. Here's some other data from bullpen CRE. Again, sort of the same ranges at the analyst and associate role, anywhere up to, 50, 60% of base for the bonus. And so there's a tremendous amount at stake. So if you were to just take sort of a medium level, say, well, if I were to start a job, let's say this year in 2026 as an analyst, and I sort of cut it down the middle, say, and I make gross base salary of 125,000, and then I extend that over 5, 6, 7 years, just doubling it in year one and two, and then adding the 125 thereafter. So no inflation, no raises, no promotions, really. You get to north of $1 million in gross comp just from base salary. So this is actually, while it looks pretty rosy, this is actually probably pretty darn conservative, actually, over 7 years to not show any, inflation on the earnings side. If you were to look at it starting at a little bit of a higher level, starting at associate, let's say your first year base salary is 200,000, and then we extend that out, over 7 years, you're at over $1.6 million. Okay. Again, probably conservative because you don't have the raises, any step functions in your salary. You don't have any promotions, and nor do you have any carry in projects, any equity participation. So why get a certification? Well, you want to put yourself in contention naturally for those types of positions, most likely. You can learn certainly without getting a certification. That is true. But there are several benefits and advantages to getting a certification, and one that gives you all those skills and gives you all that knowledge. The first is it validates them, right? There is, when you get a certification, a sense that there's somebody that is monitoring this, somebody that is responsible for this curriculum and stands behind the curriculum and the rigor of the course, the accountability that the students have to actually absorb and retain the material. So it's essentially more official than just saying, well, I went and I took this course and I passed. It's has more panache for sure. It's going to give you potentially a competitive advantage for those who haven't demonstrated the same commitment and work ethic and willingness to challenge oneself that you have if you go through Refi. It can help you possibly move up more quickly than you would be able to otherwise, help you negotiate for that compensation improvement. And it puts you into a community of like-minded individuals, upwardly mobile, driven people in commercial real estate. So who are these individuals who take advantage of Refi certification, who leverage it? Generally speaking, it's students and professionals. On the student side, it's undergraduate and graduate level students, and then also recent graduates. With respect to professionals, it's people who are full-time already in commercial real estate, all the way through, I would say, sort of mid-career. Let's call it about 10 years in. People who are on the entrepreneurial side as well, who are out there and they're making principal investments or they're making loans as a lender, and they're looking to grow their platform, and they want to have the requisite skills and the requisite knowledge and the confidence that goes along with those to grow their platform. We also have career switchers, people who are not in real estate whatsoever, coming from construction, or they're professional athletes, former professional athletes, or they were in the military. And so really folks from many different walks of life, but they're all essentially focused on the same thing, which is I want to wrap my head around real estate finance and investments, and I want to be competitive. And I want to have my eyes open to all the things that I should be considering when I take a look at an investment. Okay. Again, some of these roles that we're talking about, people are either currently in or they're targeting. A lot of them have the word analyst or associate in them. You see them here, private equity analyst, development analyst, investment, sales, capital markets, and so on. Okay, let's talk about some success stories real quick. These are real people who have gone through Refi. Just very briefly, since we need to focus on the curriculum, we have, starting at the left here, we have Darren, was in Southern California when he was taking the course and has now since gotten his first position in commercial real estate and has relocated as a result of that. And he and I worked together for quite some time to get him positioned such that he could be attractive to commercial real estate employers. So he's stepping into a development role and he's just absolutely pumped. And he came from totally non-real estate background. We've got Scott, who is currently in the master's program at Columbia University. And Scott was a leasing broker for JLL for 10 years in Manhattan. And so he's very much an experienced real estate professional. But his goal is to transition over to the sponsor side, to the principal side. And so he worked on Refi, and we also worked directly together on a custom basis. He worked on that to get prepared to go to Columbia. And so that when he was at Columbia, he could just step into the finance class and just absolutely crush it, which is exactly what he did. And then we have Matt Shell. Matt is currently an associate at Morgan Stanley Real Estate Investing, and he took Refi several years ago and has had these fantastic positions both on the investment sales side and on the principal side, and now with the Morgan Stanley platform. So you'll be in good company with these individuals who, as I said, are upwardly mobile, are driven, and so on. Why choose Refi in particular? Well, most of the time, in addition to the skills and knowledge that you get, you're choosing a certification for the reputation, for what it connotes. What do people think of when they hear that or they see those designation initials after your name and your LinkedIn profile, or they see it on the top of your resume in your education block? And quite frankly, a lot of people put Refi up at the top of their resume because they're very proud of it, and it was difficult enough to warrant being at the top and not buried at the bottom where most people are not going to see it. The statistic, I don't know exactly how true this is, but the statistic that I have heard is that on a first glance, a resume would get about 4 to 6 seconds of eyeballs on it from a human. Okay. And so if they're only giving 4 to 6 seconds, it's almost guaranteed that they're not going to be looking at the final bullet at the bottom for a certification. And so this is one that's worth putting at the top, and it will be recognized and seen at the top. It's the most well-known of its type, certainly the most comprehensive curriculum. It's the most rigorous, right? And we're very upfront about that. It's not unfair, but it is challenging. It's fair but tough. And that's really meant to prepare you to succeed on the job, because you're probably going to have a tough job, quite frankly. That's why they pay as they do. It's a difficult job. And so we're going to make sure that you're equipped and prepared. It also gives the fastest path to certification by bundling in the Excel for Real Estate certifications. I'll go through that when I go through the curriculum, but basically the short version is you can have Excel for Real Estate level 1 and level 2 certification within the first week or two of taking the course. It's a very flexible format, self-paced. There's no expiration on course access ever. In fact, Darren just reached out to me and said, I want to redo the course to prepare to step into his new position. And many others have done this as well. Like years go by and they'll reach out to me and say, can I redo the course? And I said, sure, you can redo the course. And that's the type of benefit that it offers you. There's no expiration. We don't reach into your home and take back the textbook, nor do we pull the plug on your online access. We find that to be absolutely outrageous. It's here for your entire career. So what are the goals of the program? Okay, and what are the outcomes that we're shooting for and that we often get? So regardless of your background, We want you as a learner to gain solid grounding, theoretically, technically, in real estate finance and investments, and in using Excel. And by the way, we now have exercises woven into the course that involve AI, and I'll talk a little bit more about those in a bit. We want you also to become a more critical thinker as a business person. Okay, real estate's a business. You're a business person. This is a business class. It just so happens to be focused on physical properties and leases and loans and so on. We want you to be able to attack any sort of analytical problem that comes your way over the course of your career in real estate, whether that's a 30, 40, or 50-year career in real estate. We want you to be able to approach anything with confidence and the ability to overlay a framework, an analytical framework onto the context, onto the circumstances, and reason through how one might conclude at what price, for example, they like a particular investment. And naturally, we also want you to come out with all of the vocabulary. Real estate has hundreds and hundreds of nicknames and abbreviations and acronyms and formal terms. You need to know the language. And so you're going to come out being able to be quite fluent in the language of real estate. From skills and knowledge, outcomes perspective, you're going to be able to forecast operating cash flows for an operating property across property types. You'll be able to use multiple layers of debt, senior debt, mezzanine debt, and so on, to analyze a transaction, the financing of a transaction. You'll be able to value a property acquisition, quantify net wealth through 4 different exit strategies, solve for returns to equity in aggregate, and also at the joint venture partner level. And this is also going to give you exposure to ground up development analysis, not just acquisition of existing properties. I'm going to pause for a moment here and just talk about the authorship. I'm Bruce Kirsch. I'm the course co-author and the textbook co-author. That blue book you see here is affectionately known by many of its readers as the Blue Bible of Real Estate. It was a nickname given to the book by the readership. And it's been a fixture in commercial real estate for decades at this point. Peter Linneman, my mentor, is the original solo author of the book. I joined him as co-author about 7 or 8 years ago. It's been adopted over time by more than 100 colleges and universities. I taught it when I was adjunct faculty in real estate at Georgetown, and that reconnected me with Peter, who was my professor when I was getting my MBA at Wharton, and started out actually by editing the book for several years first. I've been in commercial real estate for over 2 decades and providing skill certifications to professionals and students for 15 years. I did work in commercial real estate, 2 Washington, D.C. development platforms, and currently I'm a commercial real estate investor across strategies and across geographies. I've over time been the financial modeling trainer to some of the largest platforms in the business, Blackstone portfolio companies, Brookfield, Greystar, consultant to Rockefeller Group and others. And I've also produced an entire suite of Excel tools that are institutional grade. And I got one fantastic assignment, which you may be familiar with in the commercial real estate market, to help build the model for the District Wharf. And this was about 15 years ago at this point. They were putting together their materials to go raise capital. And I helped them rebuild their model in a new way, such that it could be presented to lenders and to equity. And they successfully, at the time, raised the largest construction loan in Washington, D.C. history, almost $850 million. None of this would have been possible without my crossing paths with my mentor, Dr. Peter Linneman. Peter is a living legend in the commercial real estate business. He is the founding chair of the Wharton School's real estate department. He's no longer on faculty, he's emeritus. But if you haven't heard of him, you will hear of him as you travel throughout the commercial real estate business. For over 20 years, he's been the primary author of the Linneman Letter, which is a very regarded and respected economic analysis of the commercial real estate business that comes out quarterly. He has his own consultancy, Linneman Associates. He's been named many, many times as top influential individual in real estate. He's been on more than 24 boards. He was selected in the 1990s to be the chairperson of Rockefeller Center Properties to sell it out of bankruptcy. And he's also run private equity funds and is currently active commercial real estate investor. Peter is this just fantastic individual, communicator, teacher, and the textbook is really very much in his voice. And there's tremendous amount of video of him as well in the course. So let's take it back to you and let's talk about what do you need to thrive as you're taking a look at either getting into commercial real estate or plotting your next move to move up in commercial real estate. Really, what you need is the right knowledge and the right technical skills, right? And that sort of congeals into this ability to solve problems for others. Now, if you're an entrepreneur, you're essentially solving problems for yourself, but you sort of like reporting to yourself. As an entrepreneur, especially if you're solo, you wear all of the hats. And so as sort of the CEO, you then task yourself as the analyst to figure out, is this a deal that I should be taking a close look at, or should I just pass on it? One of the main challenges that everyone has is that there's just not enough time to do all of the needed analysis. And so if you can learn and equip yourself with skills that not only allow you to perform the analyses, but to do it rapidly and with utmost confidence, that's where you want to be. And that's where you can be tremendously valuable to an employer or to yourself as an entrepreneur. Let's go through the course curriculum. So the course is very much based on the textbook. The textbook is fantastic. It's very interesting, and it's like no other textbook that you have likely ever read. It's very conversational. It almost reads like a super interesting set of magazine articles on commercial real estate. And as I said, that's all owed to Peter and his fantastic writing style and way of relating complex topics in a very simple manner. We start at the left with prerequisites and then move over to risks and opportunities, leases, pro forma, cap rates, and so on. I'm going to go through all of these individually in a moment, but I will highlight here that throughout this curriculum, we have put a series of connected exercises, 19 of them, that allow you to simulate making your own investment in commercial real estate. And you'll be interacting with an AI of your choice. It could be Claude, it could be ChatGPT, it could be whatever else you want to do, but you're going to put yourself as the protagonist, assuming that you have the capital to make your first investment. It's going to walk you through as we learn about leases and pro formas and cap rates and debt and exit strategy. You're going to be querying and discussing these elements as they relate specifically to your proposed investment. And so it's a fantastic way to bring what is already a super engaging course to life even more, because it brings it all back down to you and allows you to really understand in a first person manner how you need to be thinking about all of these considerations when you're looking at putting capital at risk. So let's take a little spin here through the curriculum, and we're going to go in sequence here. So we start out with prerequisites. Naturally, just like everything else in life and in architecture and construction and real estate, you need the right foundation. You need a solid foundation in order to be able to rise, in order to be able to build and build and build on top. So prerequisites is where you're going to get that initial foundation. One of the most common questions that we get about the course is, well, what do I need to know before I take the course? Or what courses do I need to take before I take the course? And the answer is nothing. Literally nothing. You just need an appetite to learn, and we will take you from 0 and bring you all the way to 100. And so that's very much aided by getting this right foundation in place, learning about time value of money and learning about amortization and learning Excel skills that relate to real workflows, real tasks that you're going to encounter on the job. You're going to pick up your REFM level 1 certification in this module. For each of these, I show the mix of media, video, audio, textbook, and then the quizzing and the exams. And I'm not going to go through all of them, but The course itself is very multimedia in nature. The second module, risks and opportunities. Okay, you're talking about, what is real estate? What are the different property types? How do they differ? What are their idiosyncrasies? How do they operate differently from one another? You're also going to pick up the level 2 certification, the real estate finance Excel certification module 2. Next, we move on to leases. Leases are the lifeblood of commercial real estate. You need to understand what they are and how they typically operate and how they could vary from that typical operation, and how important it is to understand the nuances of the variance of various expense reimbursement structures and rent growth structures and the like. You'll also be modeling in Excel leases both from the landlord and tenant perspective, so you understand how it works on both sides. Next, module 4, property level projection modeling. We're going to look at an existing operating property, do a multi-year forward projection of the operation of that property, and we're going to consider that it's not always just everything's going to grow smoothly at 3% year over year over year. That's a fantasy. It's a fiction. So we're actually going to build in economic stress and property stress into that 5-year journey so that you really get a true practical, realistic feel for how can this property produce cash flow? And it's not always pretty, but it's incredibly important to understand that there are both ups and downs in operations and in fortunes. Next, due diligence and capitalization rates. You need to understand intimately what are cap rates, what are the characteristics, what are essentially is the composition of a cap rate, how does it differ, how do I choose a cap rate for future sale of the property, and so on. It's incredibly critical to really understand what they are, how they're essentially self-reinforcing with valuations, and be able to speak intelligently about them so that when you see news on cap rates, you understand what it means. Cap rates are compressing, cap rates are expanding, and so on. Also, we'll talk about due diligence, which is one of the most overlooked topics in most courses, but is a fantastically important aspect of all investing, not just real estate investing, but all investing, whether you're on the equity side or the debt side. Any financial stakeholder needs to master due diligence to be able to responsibly put capital to work. We'll talk next about development. Ground-up development's a slightly different business model, different enough that you really need to think about it in some other ways. I mean, the goal is to get to a stabilized property income stream, but the path to get there is very risky. And it involves essentially a money-losing business period and then hopefully, eventually, money-making period of operation. But there's a lot of nuances to development that are important to understand. For example, how much should I pay for a development site? How do I know what the right value is to budget for that site versus all of the other things that I know I'm going to have to pay for, hard costs, soft costs, and financing costs, and so on. Speaking of financing, Module 7, debt financing and capital structuring, you're going to learn all about the use of debt, okay, whether you should use it. If you're going to use it, how much should you use? What are the things that you should consider? What are the benefits of a long-term loan, a short-term loan, a floating rate, a fixed rate? Okay, why would you want to choose one versus the other? Again, there is up and there is down, just like in every other business. Peter says, debt's your friend on the way up and your enemy on the way down. And after reading this chapter, you'll have a real appreciation for that. But it'll get your head wrapped around the idea of using financing in the form of senior mortgage and perhaps also junior debt, mezzanine debt, so that you can confidently look at transactions, not only at the operations of the property, but also at the financing of the property. Next is ground leases and exit strategies. Ground leases are a little bit less common, but are something that you're likely to encounter over the course of a career in commercial real estate. So we make sure that you have the proper exposure to what they are, how they work, how they're different, how do you value properties that are subject to ground leases, how do you think about that? It's a little bit of a slippery concept for many because It's just hard to sort of understand that you can own a building but not own the land on which that building sits. And we'll look at it both from the perspective of the building owner as well as the ground lessor, the owner of the ground. And then exit strategies, right? Every investment, you always need to go into that investment with some ideas for how you could potentially exit and when. And we go through the four main exit strategies in commercial real estate and make sure that you understand what are you giving up when you choose strategy one versus two versus three versus four. They're all slightly different in terms of, do you have control of real estate after you exit or not? How many properties do you have control over? What's your net wealth position? And what's your income tax exposure from exiting in the various ways? Super important information, and the details really matter. Module 9, real estate companies, private equity and joint ventures. Every piece of real estate is typically held by a special purpose entity, such as an LLC, but that LLC is a company, right? And so that company also needs to have reporting. And if you have multiple properties, or you have a company that has a portfolio of properties, and all of those need to get rolled up and be reported on. And so you'll get a sense of how reporting and modeling at the company level differs from that at the individual property level. In addition, we'll look in depth at equity joint venture waterfall modeling. This is where you'll pick up the level 3 certification, and you'll learn about the history of real estate private equity funds, how they came to be. And it's very interesting to put it into the historical context. Naturally, we have to talk about cycles and the growth of markets. Those are part and parcel with looking at any business, but real estate in particular has a very cyclical nature due to the imbalances that you get with supply relative to demand, and then also supply of capital as well. Module 11, return profiles and market evolution. There's public real estate vehicles, there are private real estate vehicles. There are indices that track the performance of those flavors of real estate investment. You'll understand what the strengths and weaknesses are of those indices, where they fall short, how to interpret the information that you're getting, and how to think about market change. Okay. When you're a real estate investor, you're constantly having to reassess your investment thesis. And do I still believe this? Do I still believe that? Okay, what's the bet that I'm making on a going forward basis? And how has whatever has hit the news today impacted that, if it's impacted it at all? We'll wrap up with module 12, talking about corporate real estate. Whether you're a business owner, a real estate business owner, you may want to own the property in which your offices are, or you may think that it makes more sense just to rent property. Okay, so you need to understand how to think as a tenant as well as a landlord. And then entrepreneurship and ethics are incredibly important. Ethics is overlooked, I would say, probably by every other course, but that's your reputation, basically. And your reputation is really the most valuable asset that you'll ever have. And so you need to understand, what are the types of ethical dilemmas that I may run into, and what should I do? And so obviously there's a lot of shades of gray, but you should just have your eyes open to the types of things that, if you're active in business, you're most likely going to encounter at some point as you do transactions and operate within the commercial real estate world. When you complete the course, we celebrate you. We talk about it and we post on LinkedIn, unless you're opposed to us doing that. It's a big accomplishment. It's a real course, as you can tell from the curriculum. And it's something that, as we said, a lot of people are very proud of, and they'll put in the top of their resume, right, in the education block in particular. Next steps, we have the self-paced format, which is $1,999. We have special pricing for nonprofits and for students, which are listed there. We do have the Affirm, which is the sort of buy now, pay over time option, which you can look at. We do have a couple of special promotions as well. So if you are already an REFM customer, you can apply whatever you've spent on other REFM learning materials to Refi dollar for dollar, and you just email us for that. If you know someone, a friend, a colleague, a family member, We've had fathers and sons do this, and you want to do the course with that other person, let us know and we'll give you both 25% off, which is a big chunk. So that's another special promotion. I'm always happy to talk to people for 15 minutes just to get them to a place where they understand, yes, this is good for me, this is right for me, this is going to be an asset for me, or not. Or if it is, makes sense to enroll. So you can get the consultation. We'll send an email follow up to this with the link to the webinar and then the link to the consultations. Just schedule time with me and we can chat quickly to see if this is a good fit for you. Okay, so a couple questions that have come through. How does Refi compare to Wall Street Preps and Wharton's program? And then also, can I use Excel for Mac or do I have to use Excel for PC? Take the second one first. You can use Excel for Mac. And in our level 1 boot camp, we teach to both PC and Excel. So we talk about the Excel shortcuts and the various differences in how do I activate certain functions, Excel, which is different on PC versus Mac. I will tell you though, for practical purposes, the real estate business works on PC. So you don't need to get one now, but just have that in your mind for the future that eventually, if you're going to go into the business, you're going to be given a PC. I've been in a lot of offices over the years, and only one time did I see the staff have Macs, and that was a development company that was sort of very architecturally and design oriented, and so that sort of tracked, that made sense. Otherwise, it's all PC. How does this program compare to Wall Street Prep / Wharton program? This program is the real deal, I will say. I haven't taken that program. I'm aware of that program. This is the real deal. And the thought is that you would, like most others who go through the program, engage with this content for about 15 weeks, which is a typical semester length. And the breadth and the depth of the curriculum and the exercises that are required and the testing that's required would not be possible in a shorter period of time, just straight up. You cannot squeeze 15 weeks worth of learning and activities and exercises into 8 weeks. It can't be done. So if you wanted to look at it in a very simplistic basis, you'll probably learn twice as much and come away with better retention with this course than the other. I understand the attraction of the Wharton name. Okay, I'm guilty. I went to Wharton. I get it. But this, I think, will give you a more robust experience. And in fact, I had someone call me the other day. They said they took that other course and it was just like it started and then it was over. And they didn't have access to some things after the course had terminated. They ended up signing up for Refi. So it's a personal decision. But those are my thoughts. Okay, well, thank you everyone for joining. I'm in a fantastic mood today, so I'll give you this. If you're going to sign up today, email me and I'll give you a 15% off coupon code. It has to be today though. So you can email just refi@getrefm.com. I'll see that email. I will generate a coupon code for you for 15% off. And you can start the learning this evening. You get instant access to the course platform and the textbook ships out next day in most cases. So thank you everyone for your attendance and wish you all the best. Let us know how we can help you on your journey. Thanks.